Hello, everyone. Mike Butcher from TechCrunch. Apologise in advance for the all-male panel. Appears to be, unfortunately, the luck of the draw. Let's talk about, we've been talking about early-stage investments, the future of work, various things, but we're going to sort of shoot the breeze a little bit because we've got here Filip, who's founder and partner of Cherry Ventures, and one of his investments, Sebastian Fallert, who's a co-founder and CEO of Ben, which is short for benefits, if you haven't actually figured that out yet. But let's briefly talk, first of all. Cherry Ventures invested in Ben, or Sebastian's startup called Ben. Now, Ben is about employee benefits.
That's right.
First of all, give us the sort of the 30-second download on what it is. Employee benefits, because there's lots of employee benefits platforms. So why are you a different one?
So Ben it's a London-based startup. We're 4 years old, and we are the world's most flexible employee benefits platform. We do two things really well. One, we do any benefit anywhere in the world. We're global. And two, we are highly customizable. So enterprise companies use us to be more efficient and maximize their workflows.
Great. So you're the world's best. Well, that's a matter of opinion, obviously.
Most flexible.
But why did Cherry Ventures pick this one out of the bag when there's so many platforms like this?
Yeah, we did look at a couple of benefits providers. I think we chose Ben because I think they're the perfect response to the changing work environment we're all in. And I think we've all seen it during COVID, people going remote, then after COVID, people going hybrid, international organizations having teams all over the world in little cells or even single units. And there's already a lot that has been done on the HRS side. There's a lot that has been done on sort of like the employee contracting side, if you think about companies like Deal or Remote or Rippling in the US. But nobody really solved this quite complex topics of benefits, right? And benefits is not just a Starbucks card you can use to get a free coffee because your employer pays for it, but benefits goes way beyond that. It's about your health insurance, it's about your retirement planning. It's about, obviously different spending categories. So it's a highly complex topic that's regulated differently in different markets. And for companies, they want a one-stop shop solution. They want someone that takes care of whether you're in Spain or whether you're in the US or whether you're in Kazakhstan. You need to be able to serve the employee with a different offering that you want as an employer. And that was really what got us excited about Ben. Apart from that, I'd say it's a pretty okay team. So that always helps too.
Okay investor, okay team.
Yeah.
So obviously I guess it's what you're trying to say is it's employee benefits plus fintech.
Yeah.
So there's a bit more to it than meets the eye.
Yes.
You raised, I think it was 22 in total so far, or?
That's correct.
And 22 million so far, and that was before at the AI boom, wasn't it? So not too bad.
Cherry did our seed round in very early 2020, I think a month before the first lockdown. So that was at a time where we didn't even know that the future of work was going to be fast-tracked through a pandemic of working from home and then hybrid working. And then we did our A round with Atomico in 22.
So presumably you think that the trends are up and to the right for you because in fact, there was a news story just today or yesterday saying that there's an explosion in people looking for remote work, Googling the words remote working. Yeah. Maybe it's because the weather suddenly improved briefly for 5 minutes in London. But, what are your projections for that?
I think the world will be a hybrid one, the professional work. So I think we're seeing less and less companies that go fully remote, but employees today want flexibility. They want to be able to maybe do 1 or 2 days a week from home, or they want to stay somewhere for a couple months and be able to work from there. So I think in a modern company, you want to be able to offer employees these it's also a form of benefits, being flexible as an employer, and you need the tools to to be able to do that, right? Both from a tax perspective, from a payroll perspective, and then also from a benefits perspective. So I think that's kind of, I think that the world will see is it's not going to be everyone back to the office, it's not going to be everyone fully remote. I think it's going to be a mix, and the mix obviously makes it more complex as well.
Does that chime with your projections and also your strategy?
Very much so. So like, as Filip said, like companies, so our customers, very, very few of them are fully remote. Like, remote.com is a customer and they are fully remote, but that's actually the exception by now. 2 to 3 days seems to be what people are landing on. And going forward, I think the office is going to remain very popular, very important. Like, companies are opening satellites in cities that make sense. That said, global hiring has opened up talent pools that weren't accessible previously easily, and that's not going to go away because it's such an amazing thing that we've accomplished.
So do you think, therefore, that investors and entrepreneurs could still mine the world of remote work or hybrid working, that there's more to be done, or do you think that the space is kind of, more or less filled out at this point?
I mean, there are a lot of players that have gone into different directions. The HRS side we mentioned, the payroll side we mentioned, the benefits side, I think there's a couple players, Ben, we believe will be the winner in this space. There's others that, take care of flexible office space. Obviously, we've all seen the big wave of co-working that's now, I think, looking very, very different. So I do think you already have a bunch of people sort of covering the different aspects of the space. So I think it's probably harder today to break into it, also because you don't have this external push, right? COVID was just like a shock that just gave rise to this whole remote work movement, which then obviously propelled a couple of these companies forward in a way that they couldn't have done without this change.
Do you see, Sebastian, do you see still spaces for startups in this area?
So I think, given that hybrid working probably won't go away in global hiring, I think the instrumentation of it, like inside the enterprise, is still a huge opportunity. Like, we believe, even with phenomenal HRSs on the market and quite scaled, we've just seen the beginning of what we're going to be seeing in HR tech, including AI, helping with automation and improving the employee experience. So I think it's a fantastic space to build.
Do you think that employees are concerned about the monitoring of their work habits via employers using AI? For instance,
I would be.
For instance, what happens if an employee doesn't take up the gym membership and suddenly they're late for work more often, or they're more sick or whatever? Do you think they'll be demerited? Will there be a kind of a social ranking system inside companies?
It's hopefully not, right? Like, that sounds
sort of China style.
That sounds very Blackadder, right?
Huh?
So that sounds very Black Mirror.
Well, we are living in Black Mirror, aren't we?
That's right. So what I would say is, so Ben, for example, we have a payment card which employees use to spend corporate money. You can have a.
Check your microphone.
You can have a. Can you all hear me?
Better, yeah.
Awesome.
Yeah.
You can have a well-being budget, a learning and development budget, a mobility budget, so employees make purchases. And that's obviously quite private data. And so, like, we do get the occasional questions in terms of, are you going to mine this data? Who's going to be receiving it? And the answer is obviously, it'll be anonymized. We only do analytics and play back the insights, and then we delete the data.
Right. Do you give employees any control over the data? Or is it the employer?
It's the employer,
right?
But the employee sort of gets informed about, like, what happens to the data,
right?
And they have to consent.
I see, of course.
I think that.
Well, they don't get paid.
Yes, eventually
they get benefits. Yeah.
I think that the employee has much more power than maybe you'd think, right? Because there's a huge war for talent. There's everyone's competing for the best people, and I think as an employer, if you don't play by the rules, I think people will not want to work for you, and therefore I think it's going to be a push for transparency. It's going to be a push for solutions like Ben to offer like additional benefits to your employer that are different from the salary.
Do you think that having an employee benefit platform like Ben would be a draw for certain employees? I think they might make a choice on who they go to work for based on
Yeah,
on platforms like this?
I think so. I mean, obviously, what motivates people to start a job is obviously what are they going to work on? Is it something challenging and exciting? And then there's the company itself. There's a leader they will report to. So there's a bunch of different factors that make you choose who you want to work for. But a company that offers a wide and competitive set of benefits to their employees that's managed in a professional way, you have access to software. I think that is a differentiator. And it's something that a modern company should have in the software stack.
I couldn't agree more. And also, benefits are a really great way to embody and sort of talk about your culture. Like, are you the type of company that looks after employees' mental health, supports them when they struggle with fertility, when they have, health problems and things like that? So it's very powerful for attraction.
All right. Well, speaking of that whether or not that war for talent, I suppose. Speaking about sort of startups and entrepreneurship, you're a second-time founder. Cherry Ventures is, well, it's not brand new, but it's one of the newer VCs in Europe. There's a few things going on in European tech right now. Obviously, the big bull run is over. Europe is in a kind of having a certain crisis of confidence, I think, a little bit at the moment. There's obviously a war in Europe. There's sheer, juggernaut of AI platforms now coming out of Silicon Valley. A lot of people flooding back there. What do you think we can do right now in Europe, say at the VC stage and at the entrepreneurship stage, to keep sort of the optimism going around about European startups?
I think we can be much more confident about the talent that we have in Europe, and I think there's founders out here working on super ambitious topics, whether that's in AI, if you look at sort of Mistral, or in defense, if you look at Helsing in Germany. So there's so many companies that are being created that will be able to compete on a global level. So I also think Europe is sometimes much better than it sees itself in a way, right? I think we need this confidence. We need to think about European sovereignty vis-a-vis sort of China, US, and also dare to work on really big problems, right? I don't think we'll sort of change the world with the next mobile app, but we need to build things that fundamentally have Europe on the global map. Yeah? And that's also the kind of stuff that we're excited to back with Cherry.
Yeah, so Sebastian, you're a second-time founder, but you moved to London in 2015, I think.
I did.
And you've chosen to you're German. You're
German.
Still here.
That's right.
Haven't you heard of Brexit?
Post Brexit. Indefinite right to remain.
I'm of course joking, but it's quite clear that you see something going on either in the UK or in London, particularly to keep you here. You didn't start this in Berlin, for instance. Why are you here?
My wife is from London.
There you go.
No, but
next question.
But that is, I think London is.
But you've raised from Berlin VCs, but also you have UK investors as well.
Yeah, Atomico is based in
of course.
London. I think London remains a powerhouse for European tech. I think the bench is extremely deep. So a company like Ben, between Series A and Series B, looking for experienced managerial talent, it's just much easier out here.
Yeah, I agree. Yeah. I think also if you look at fintech, right? Obviously, there's been a lot less money being invested in fintech in the last year than previously. I think we came from around 25 billion invested in Europe in fintech companies to around in 2022, 23, we were at around 8 billion. This year it's a little less than 4, so you see like a huge decline, which has obviously to do with the overall volume that has been invested into venture capital. But if you look at where that investment is coming from, the UK is by far the biggest ecosystem in Europe.
And you have a London office, Cherry Ventures? London office.
Yeah, we have London, Berlin, and Stockholm.
I mean, I think, personally speaking, I think that one of the interesting things about Brexit was that UK VCs suddenly deployed a lot more money in the EU.
Yeah.
But also partly because of London, but also London, Oxford, Cambridge, European VCs have deployed money back into the UK, oddly enough. So it's been a strange period we've been working through. the war for talent is really white hot right now, isn't it? What can we do about that? You know, do you see a lot of talent being sucked into the AI space? How do you compete? What do you think?
So fundamentally, it's about providing an environment and a mission that's inspiring. Like, we feel that's more important than ever. Like, great people have choice, and we are at full employment, right? Like, especially when you look at the type of talent we want to attract. And we're quite fortunate in that, like, we have an inspiring mission. We want to enable a world working at its best. That's a nice talk track for an interview. But fundamentally, I agree, it's hard. It's hard. And I think as London and the UK, even post-Brexit, it's so important that we keep the borders open to the extent that the talent wants to be here and can come in.
Are things tougher on the VC side compared to the last few years? The valuations are obviously down in some areas, such as Fintech. Where do you see the kind of seeds of growth and the optimism in early stage?
Yeah, I think early stage is still very active, still very competitive. There's lots of things being started, and it is also, you know, I think it's very different from the growth stage, which has been more quiet over the last 2 years, and we are coming from a time where probably also too many companies raised too much money that probably shouldn't have raised, and I think so we're today in a market, there is liquidity for good companies for sure. Strong companies are able to raise rounds even in the growth stage, but we are definitely in a very, very different environment than 2 years ago. And to be honest, I don't necessarily think that's a bad thing. It makes it a little bit harder for companies. I guess the bar is higher in terms of where you need to be with traction, with momentum, with growth. And I think you also need to show a slightly different profile, right? I think 2021, 22 was all about growth. So as long as you were growing a couple 100% year on year, nobody cared about your unit economics, your profitability. And I think we're today in a market where you need to really keep a balance of, on the one hand, yes, you have to have a certain growth profile, especially if you're a smaller company, but then you also need to show a clear path to profitability, to, you know, profitable unit economics, and convince investors that you will be able to build a sustainable company, right? That's not just, you know, users, but it's actually revenue, and at some point also profit.
And Sebastian, you're obviously building a company with real revenues. You have a fairly slow sales cycle. You've got to get those big customers.
Yeah.
I think you said HSBC in Singapore is one of your customers, so you have to kind of go in and sell to them, and that's takes a bit of a pain, but obviously, I guess once you've got them for a while.
That's right. So selling to a company like HSBC or so, like, you can't do it in 2 weeks. And we always say, like, benefits is something that rolls out to every employee, including the CEO. If you manage the CEO's healthcare plan and their pension, it does take a bit longer.
Yeah.
That said, it's incredibly sticky, right? Like, it's almost impossible to rip out.
Right.
So we do reap those rewards.
So overall, both of you optimistic right now? How are you guys doing on your mental health? I realize that there's going to be a mental health resilience panel tomorrow. Will you be attending that? Are you interested in that stuff?
Well, you know, we actually just launched a program at Cherry. We call it Co-Pilot.
Yeah.
So we have a mandatory, strongly encouraged coaching program for all of our founders that we're working with. I think it's an incredibly important topic, and I think
you think it's more important now?
It is. I think it is
compared to a couple of years ago.
You know, if things are going well, you know, you go from one endorphin rush to the other, you raise a big round, you close a new customer. But when things are a little bit tougher, you need to actually keep a good balance and stay sane as a founder. And I think that also needs to be someone that, you know, comes in from the outside, not necessarily your co-founder, your employees, your investors, but you need, and in a way, a neutral third party that sort of helps you on a couple of challenges. I think that's very, very super important. That's very good and very important.
Yeah.
Well, it's an important topic. But gentlemen, thanks very much for coming. It's great to have Tech.eu here in London. Thanks very much to Ada and for Robin for bringing Tech.eu's summit conference to London. It's fantastic to have you all here. And I shall see you later on around the event. From me, Mike Butcher at TechCrunch. See you later. Thanks very much, everyone.
Thanks, Mike.